Hello, this is Mr. Ayazuddin S. Khan from Pune, Maharashtra State, India. Good morning. Last time we discussed gross total income, and that time at the end of that lecture, I promise you that I will discuss total income in the next video. So, today we will have discussion on total income. This is also a very important term and having practical importance. So, we should be very careful in understanding this term, total income. Total income, that is the official name, that is the name as the Acts call it or Acts gives it, total income. Its nickname is taxable income. Its nickname is taxable income. So, sometimes it is easy to remember taxable income. For many people, it is easy to remember taxable income than the original name or official name of the term total income. But I will advise, you please remember its official name, that is total income instead of taxable income. The Acts throughout its long journey of tale-telling, it uses this word, total income. Our courts, high courts and supreme courts, while deciding income tax disputes, they also use official name of this term, that is total income, and they hardly refer it as your taxable income. So remember the what you call the importance of the official name of total income. Total income and gross total income, there are two different expressions. Gross total income, this phrase is different. Total income, this phrase is different. The calculation method of gross total income and the total income are also different. Gross total income, as we have already discussed, we can have this gross total income by adding the net income of each head of income, that is net salary income, net income from house property, then net profit or net income from the business source, then net income from the sale of asset, then lastly the net income from other sources. That way we calculate or we work out the figure for gross total income. As far as total income is concerned, this term, total income term, takes birth from gross total income. Once you have this figure, that is the figure of gross total income, then it is easy to go for total income. That is easy to calculate what you call your total income. The purpose of gross total income, is to know whether you are you have to file income tax return or not. The figure, the figure, the figure you you get under gross total income decides whether you can file the return or not. You followed. And as far as total income is concerned, these figures give you the tax amount. You can work out your income tax liability on the basis of total income. You followed. This is the difference between gross total income and total income. Gross total income decides whether you can file the return or not, whereas total income gives you fair idea or exact idea about the tax, income tax that you are supposed to or you are liable to pay, or your tax liability, that way. Then further, total income, how it is calculated, that is very important. When we discuss total income, we discuss this total income, what you call, just to know our tax liability. That is the, what you call, end of the matter. That is, we study everything for, we study everything about income tax for giving the tax to government. So here is our station, that is last station, last point, total income, that tells you your tax liability. So that is why the important question before us is how to calculate total income. As I told you, gross total income gives birth to this figure, total income figure. From gross total income, you have to, what you call, this your gross total income, you have to reduce by number of items of your saving that government has put in the Act under Chapter 6A. If you, for convenience sake, you forget this Chapter 6A and remember, government has given that whatever savings you make from your earning, whatever savings you do, you deduct those savings from gross total income and come to the figure of total income and pay tax on total income this way. So, what are the types of personal savings you can reduce from gross total income? There are number of items of saving that is listed, or you will find in the Income Tax Act under Chapter 6A. And what is Chapter 6A? In short, Chapter 6A, that is the special, we may call it, or rather courts also call it, Chapter 6A deductions, courts also call it as special deductions. Special deduction versus general deductions. What we have seen in the, what you call, while calculating gross total income, net salary, net house rental income, net profit, net income from other sources, etc. Those type of net incomes that we rather calculate or work out after deducting some benefits given by the legislature. We already discussed these things. So those deductions are general deduction, that is the coming from the sovereign authority, that is the Parliament. Our Parliament has given those general deductions that you can make from the gross salary, gross rental income, gross business income, then gross income from sale of your property and gross sundry incomes, that way. So those are general deductions and these are special deduction. That way you can understand these two things, that is general deduction and special deductions. That special deductions, this phrase is Act does not use this phrase special deduction. This is this is the what you call the term rather coming from the judiciary side. Courts, they call special deductions or chapter 6A deduction as special deductions. So that is good name given by the judiciary, special deduction. So you can remember both the ways. That is the things you have to deduct from gross total income for arriving at the total income. You remember this, what you call this thing, these words, special deductions or chapter 6A deductions. Both the things are okay. This is officially chapter 6A deductions, and this is the chapter of Income Tax Act 1961, chapter 6, Roman 6 and capital A, that way, chapter 6A deduction. Under that chapter, or rather in that chapter, you will find number of items of saving that legislature has given to you. You can select some items and do the saving, and then rather claim deduction as chapter 6A deduction or special deductions. But both the terms are rather okay as far as our understanding is concerned. So after deduction of these saving items from your gross total income, what you get is total income, and on this total income you will what you call you have to pay tax on this total income. That is, I think it is enough. This much knowledge about total income is enough. Total income, I will repeat, total income is also called, total income is the official name. The acts call it as total income, and we have to remember this phrase, total income phrase, only, though it is convenient for us to refer to it as taxable income. Taxable income, this is the nickname of this official term, taxable total income, and its nickname is taxable income. It is better we use or get familiar with the official name, that is total income. It is very, I feel it is advisable to use and remember this official phrase, total income, and not as taxable income. Okay, so this is all about total income. And gross total income, we have learned, gross total income shows the road to work out the total income. So that is why that GTI has got practical importance. Another factor which tells why this gross GTI, gross total income, is having practical importance is that it tells you whether you should file return or not. Gross total income, the figure under this heading, gross total income, will tell you whether you can file return, you should file return or not. But one thing you must remember, we know how to get the figure of GTI, gross total income. In that figure, whatever whatever things or whatever amounts are exempt as per the Income Tax Act 1961 Act or legislature given some what you call amounts which which not to be taxed, they are exempt, so it should not be included in the total income for taxation purpose. So such amounts we have to add in the GTI. While working out the GTI, the amount which is exempt, on that no tax is payable, why to add in the gross total income? Add and then deduct. So normally they add and deduct. That way they work out the GTI, that exempt income, they call it exempt income. So it is under section 10 of the Income Tax Act 1906, the items which are exempt or which will not be included in the total income for taxation purpose. So tax calculation depends on total income, isn't it? So exempt incomes should not be taken into account as far as total income is concerned. Now, GTI, as I told you, GTI decide whether you should file income tax return or not, but that GTI figure we have learned how to calculate. But one thing here we must remember that we have forgotten, that time I did not tell you, but I am telling you in the context of filing of return or not. GTI tells you to file return or not. So what I am telling you, what you call, you in the GTI, gross total income, you add the amount of exemption, that is the income which is exempt under section 10, under section 10 of Income Tax Act. You will find the types of income which are exempt and on which no tax is payable by the taxpayer. Okay, so if you add those items of exemption or exempt income in the gross total income, then what figures you get, that will decide, underline this thing, that will decide whether you should file income tax return or not. If that figure is 2.5 lakhs, 2,50,000, so you need not file the income tax return. If that GTI with exemption income added, that type of GTI, if it is 2,50,000, then one should not file the income tax return, as I am talking about individual and this HUF and all this, AOP, BOI. And suppose you are senior person means a person who is 60 and above. That gentleman is called senior person. If his income, GTI is up to 3 lakhs, remember the difference. A person who is not senior citizen and person who is senior citizen. A person who is below 60, he is not senior citizen. A person who is 60 and above, he is senior citizen. So, a person who is not senior citizen and his GTI figure is up to 2,50,000, then he or she should not file the income tax return. If that person is senior citizen, that is he is 60 and above, then and his GTI figure is 3 lakhs only, up to 3 lakhs only, or up to 3 lakhs only. So he or she should also not file the income tax return. Okay. So another variety or another senior citizen is also there. That senior citizen is a person who is above 80, who is 80 and above, who is 80 and above. This is another senior citizen. So, that legislature has given concession, more concession to very senior person. That the person who is 80 and above, he is called, or acts call him as very senior person, very senior citizen, very senior citizen. And the person who is 60 and above, the acts call him as senior citizen only, simple, senior citizen, senior citizen. He is senior citizen. That means he is 60 and above. Okay. So, if you are senior citizen, 80 and above, then up and your figure under GTI, gross total income, is 5 lakh rupees, then you should not file the income tax return. That is what the Act says. I think I am clear. Now, a person who is not senior citizen, a person who is senior citizen, and person who is very senior citizen, and whether these people should file return or not, the GTI figure, which includes exempt income also, decides whether you should decide that thing, that is whether these three people should file return or not. HUF also included, AOP, BOI also included. Okay. So, now natural doubt or clarification, I think it is necessary to keep in mind. The clarification is like this. A senior person, first we will take a person who is not senior. I think it is better, I will take back my sentence, it is better, first we should learn this senior citizen, that is a person who is 60 and above. He should not file the income tax return if his figure under GTI, gross total income, is 3 lakh rupees, and below, and or less than 3 lakh rupees, he should not file the income tax return. Then the question comes, doubt comes, or clarification, I must give clarification. So, how to decide, at what date we should decide this gentleman is reached the age of 60? Isn't it now? We have to find out. He should not, he is senior citizen. At what date he should be senior citizen? Whether on the last day of the financial year, suppose this is the financial year is what you call 22-23. This is the financial year, running financial year or current financial year. So, whether on 31st March 2023 we should say a person, his age 60 years should be on this particular date, then only we call him senior citizen, and then we will tell him whether you should file income tax return or not. Isn't it? That would be the doubt. So, clarification is like this, or the legal position or the position as given in the Act is like this. A person, we may call a person a senior citizen, that is a person whose age is 60 and above, we can call him. If during any time in the financial year, during the financial year, he becomes the person, he attains the age of, that is correct word, he attains the age of 60. if he attains the age of 60 during any time during the earning year, or they call it officially previous year, then he is senior citizen. He need not be senior citizen only on the last day of the financial year, as understood by many people. Okay. Then likewise, very senior persons also, we can decide his age status. Age status, not on the last day of the financial year, that is on 31st March, but we should decide his age status, whether he is very senior or not. During, if he attends, or he becomes a person of 80 and above years of age during any time in the earning year, that is, they call it officially previous year. So, if during earning years he becomes the person of 80 and above, then he is very senior citizen. And while filing the income tax return, then it is easy to know whether he should file the income tax return or not, that way. So, this is all about total income and gross total income, the remaining part of the gross total income that I forgot to share with you last time in the last lecture while talking on gross total income. But whatever was remaining about gross total income, that I highlighted or I have told you in this current lecture. So, another important thing you must remember, this term, these phrases, gross total income and total income, they are very, very important. As I told you, why important? GTI decides whether you should file income tax return or not. GTI decides how to reach the total income. That is why that GTI is having practical importance. Then total income also having practical importance. Why? Because this is the amount on which you have to pay your income tax. And this amount for you, for normal person, if it is below 60, if it is 2.5, then he should not file the return, he should not pay the tax. And if his income is above 250, then he should pay the tax. This is all about individual, HUF, AOP, these people. I am talking about those people whose income is, total income is up to 2.5, 2,50,000, they should not file the return, income tax return. So, this GTI and total income, they are having what you call practical importance, one thing. And second thing, interesting thing is these two phrases, they often confuse even the people. They often confuse also the people who are related to income tax work. Please note this. This is very important, because this is so important, and it should not be what you call loosely understood. It should not be. We should understand these two expressions or phrases very seriously. Very seriously. We should not have the minutest doubt, least doubt about these two terms, gross total income and total income. Whenever somebody asks you what is gross total income and what is total income, your confidence level should be 100%. Isn't it? I followed. I think I have explained it with my satisfaction. Okay. Thank you for watching this video. Then we'll have another video on another topic, that is the important things about Income Tax Act 1961. Before we go, to our main topic, subject-wise income tax disputes and Supreme Court judgments on them right from 1970 to 2020. So that that will come in due course, this disputes and judgments. But before that, it is advisable, better to have the something about basic things about the Income Tax Act 1970. What tells you, what terms you must remember easily. That will help you if you are. This is my videos are only for those serious students who like to know something about Income Tax Act and how the disputes come or rather arise or rather spring up, and how they are taken, those disputes are taken to High Court or all this appellate tribunal, High Court and your Supreme Court, and how these judicial officers, that is competent competent judges, they have to use their energy, their blood to understand the facts of each dispute, then apply their mind, and then must link those disputes and the understanding they got from the facts of the case, and they have to link with the what you call provisions of Income Tax Act, and a lot of serious work is involved as far as the what you call judges, they work and they decide the disputes. Very serious work, takes lot of energy from them, and then as a human being and as a devoted persons, they spent maximum time on thinking, rethinking, linking, doing study, doing research, all these things. It is not that easy because they are the Supreme Court judges are the Supreme. Nobody. This is a final platform where disputes are finally settled. Okay, I don't want to just make my this sharing longer. So I will stop here. Then we will proceed to next topic, and I will announce that topic in the next video only. Okay, thank you. Have a good day.